Welcome back, ladies and gentlemen, to Ticker Time News. I am Adam, and strap in, boys and girls. The S&P 500 and the NASDAQ and the Dow are starting the week in the red. Already, they are down, and the futures are showing a negative sign. Now, let me tell you this. The S&P 500 right now, it is down 8% from its all-time high, and it's off 7% from this month already. Starting off this year down 7% in a market roaring with volatility. Now, investors head into this week facing the reality that a poor performance by the stock market in January is typically a warning sign for a slow year of gains ahead. Don't believe me? Listen to this. Over the last 50 years, a negative S&P 500 index return in January was followed by an average for the next 11 months of only a 6.7% gain. What? That's in stark contrast between the average rest of the year return of 14% when January saw a gain. So, can we all get behind a wicked rally on Monday to put January over the top? It doesn't hurt to ask, right? Okay. More than 100 companies in the S&P 500 are set to report fourth quarter earnings results this week. That is a bunch. And we have big reports due in from Alphabet, GOOG, Amazon, AMZN, Meta Platforms, FB, and PayPal, PYPL. Now, I have a tip for you later on how to know whether a company like PayPal, for example, is growing or contracting. Okay, the economic calendar this week includes the all-important January jobs report, which the Fed will use to determine when to hike rates and by how much during its March meeting. Now, the jobs report could surprise us due to the large number of hourly workers who were caught off the guard by Omicron during the past month. Now, the unemployment rate is expected to hold steady at 3.9%. Then we have the energy market. The OPEC Plus meeting will be closely watched with supply and demand factors in the spotlight. In December, OPEC missed their production targets, totally missed them, did not produce enough oil for the world to run. Okay, at the end of the week, we get a little enjoyment whether the markets are red or green, with the Winter Olympics in Beijing beginning. Okay, knowing what the top 10 stocks are in categories like value, growth, dividend, and momentum provides investors just like you and me with the guidance needed to outperform this crazy market. So, to help investors meet their goals in 2022, we've put together our top 10 value, growth, dividend, and momentum stocks list. That's 40 high-quality stocks ready to choose from that are constantly updated, so you always have the best names available. Click the first link in the description or in the live chat to become a member and get instant access to our top 10 value, growth, dividend, and momentum stocks list, and so much more. We've done the research so you don't have to, and we actually have a special promotion that ends tomorrow, January 31st at midnight. And that is every tier, no matter what it is, gets access to our January value, growth, dividend, and momentum stocks list, all 40 names, and the most recent updates of those 40 names as well. Okay, time for my 2 Dow stocks of the week. Last week, I picked McDonald's, MCD, which ended up in the week 1.59%. And my second pick for last week was Chevron, CVX, which ran past my sell target of $135 for a 10.5% gain. And it ended the week up 2.92%. This week, I'm going with Alphabet, ticker symbol GOOG, which we'll talk a little bit about them in just a moment. And I am split right down the middle between Apple, ticker symbol AAPL, and Exxon, That's right. Exxon reports later this week too, and I'll talk about that in a moment. Now, out of the Dow 30, my two picks, Alphabet and Apple, and then kind of throwing in a third one there, Exxon Mobil, as I think there's a lot of potential with that one, but it's a bit stretched right now. The RSI is at the top. I'll get into it in just a moment. Okay. But Alphabet does have earnings coming up, and that's why we'll talk about them in a moment. And its RSI is sitting at a pretty darn low at 32. And of course, Apple is coming off record-breaking earnings with an RSI that's also on the low end at 34, even after its big move on Friday. Okay, let's get right into this week's catalyst. On Monday, January 31st, it is the last trading day of January. So if we can get a rally to end the month in the green, then hopefully there is some luck left for the rest of the year. Otherwise, it's looking like it's going to be pretty choppy. Now, the first one on my catalyst watch list for Monday is Nxp Semiconductors, and the ticker symbol is NXPI. This is where we're starting on Monday. Now, NXP Semi has earnings. That's the big reason why they're on the catalyst watch for this week. They have an estimated EPS of $3.01 a share, with revenue of $3 billion. Now, NXPI is sitting at the bottom of its nearly 11-month-long range that it has been in. You can see that right here with where it's sitting at. Right on this blue line here is where it is sitting. And you can see this range goes all the way back to just above my head here, all the way back to the 8th of January 2021 when it first entered this range. And it has been in there a couple of times. It has popped out due to earnings, I may add. And now we're at the bottom of that range. So that's looking pretty good. Now, it's also in oversold territory. Its RSI, which you can see down at the bottom of the screen here, this purple line that is going down along here. I know it's hard to see on the screen, but it's been in a downtrend since the 29th of December. And right now, the RSI, which is the relative strength index, is at a 25. 30 and below is oversold. 70 and above is overbought. Those are the times where you either want to buy it when it's oversold or you want to sell it when it's overbought if you're trading a stock. Now, if you want to start a position, it's good to watch the RSI because when the stock is down at the bottom of the RSI, usually that means you're at a interesting point, right? It could be a RSI is low because it's in a downtrend, right? And it could continue in that downtrend. But when you use other technical indicators like this support line right here, the blue support line at $182 for NXP Semi. And you also look at the RSI and it being oversold at a 25, and you start putting these things together, and it's got earnings coming up, and it has beat every earnings for several quarters now. So it's looking pretty good. Now, on good numbers and good guidance, this stock has room to run. Now, the semiconductor sector, it's been beaten up over the past 2 weeks, and I'm looking for a bounce in this sector this week. So, if you would rather take a semiconductor sector approach, then there is an ETF that you can use because AMD also reports this week too, so you can capture their results in an ETF, which is a basket of funds. Now, the Van Erik Semiconductor ETF, that ticker symbol is SMH. Now, we talked about this on Wednesday's live show because Apple beating their earnings and making record revenue in certain segments, that helped to lift this ETF up and will it will continue to lift this ETF up as well. Now, this ETF on Friday and last Thursday, it was in a buy zone. The RSI it's down. 27.8 is where it sits right now. So it is sitting in a buy zone right now. It is on a support line, and I believe it's ready to bounce. I think the whole semiconductor downtrend that we've been in, I think could turn around this week with positive earnings, but more importantly, positive guidance. That's really what we want to hear for this sector to turn it around this week. All right, so the Van Erik Semiconductor ETF, again, ticker symbol SMH. It's the best way to go if you want to capture multiple companies and their earnings this week in the semiconductor area. All right, next up is another one that should rise this week, in part due to Apple, and that's Cirrus Logic. The ticker symbol is CRUS. Now, in 2020, 82% of their revenue, well, it came from Apple. But the company has been working to expand its customer base. So, with Apple having an oversized effect on CRUS, then it's looking pretty good since Apple reported again record revenue last week. CRUS has an estimated EPS of $2.14 a share with revenue of $510 million. CRUS is sitting at the bottom of its 3-month range with an RSI of 38, which is near the bottom, but it's not quite oversold. CRUS did pop nearly 3% on Friday on the back of Apple's big report on earnings. And the options market is also excited with this one, expecting to see a 10% move after the numbers are released at the end of the day on Monday. Next up is Harmonic. Ticker symbol is HLIT. It's like HLIT. Harmonic. They have earnings coming out on Monday with an estimated EPS of 13 cents a share with revenue of $152.7 million. Now, Harmonic is nearly oversold with an RSI of 32, which is below its typical RSI range, as the bottom is usually around 41. So technicals, they're not flashing buy just yet, but earnings could flip this one as the options market is anticipating a 14% swing when the numbers come out. Now, Harmonic actually jumped 13% after its last earnings report. All right, that's what I'm watching on Monday. Now, on Tuesday, February 1, we kick off a brand new month. Will it be in the green? Well, we'll have to wait and see on that one. But February is my birthday month, so I hope that it's not a dead month. I hope it's not a flat month as we wait for the Fed on their March meeting to announce what they're doing with rate hikes. So hopefully, February can be a turnaround month, at least for the first half, right? Before we head into March and the Fed's big decision. So on Tuesday, February 1st, I'm going to start with Exxon Mobil. Now, the ticker symbol is XOM. And remember, Exxon Mobil is one of those, I'm kind of splitting half and half with Apple for the top Dow stocks, the 2 top Dow stocks of the week, Google, and then Apple and Exxon. Now, Exxon, I almost went fully with it instead of Apple, but I think Apple's got some momentum that can move it a little bit. But after much deliberation, and again, I almost picked it full blow with this one. But ExxonMobil this week, they have earnings coming up. Now, here's well, let me just get into it, okay? The RSI on this is sitting at a 76, which is just about in overbought territory. It's not there yet. It's got to get to 80. And my worry is that Exxon Mobil is stretched just a little too far. And you see down here these two little red columns. This is the RSI plus the MFI. It's just reading momentum, right? And it will flash on here, buy signals, sell signals, but it's using momentum. That's the big kicker. And momentum is one of the biggest things that I follow in stocks because it's a big indicator of whether they're going to go up or go down. And right now, the RSI, the relative strength for ExxonMobil, is way up there. And it's been up there for a couple of weeks now. It's almost like the oil and gas sector and the semiconductor sector, they swap places, right? Because the semiconductor has been going down while oil and gas sector has been going up over the past 2 weeks. ExxonMobil is a big part of that. It's one of the biggest oil and gas companies on the market. I believe it is the biggest in the US market. Now, ExxonMobil and their earnings. But man, see, this is why I'm conflicted here. This RSI reading being so high and it being stretched, right? You look at this big rally the past 2 weeks. But let me do this. I'm going to give you a different view on the chart. I'm going to bring the chart in, right? And you're going to notice something. You're going to notice something here. Same thing that I noticed. Okay. If you look to the right side of this chart where the candles are now, they're all now compressed up together, and you can really only see the blob of candles moving together. The peaks and valleys, the dips and rallies. You look at where Exxon is right now. This is why I say there's another 10% that ExxonMobil can go before it gets to any resistance. Because if we look back in history, 2018 was a great year. 2017, a great year for ExxonMobil. It was 2019 when things started to head south. Oil prices started to go down. But when oil prices go up and oil is more expensive, so does the stock. It goes up as well. And if you look at where it's been, I mean, goodness gracious, the stock has been way higher than where it is right now when we look at it like this. So again, it's got another 10% to go before it hits resistance. Even though I think it's getting to an oversold point. But enough talking about Exxon here. There's many other stocks I want to get to that have big catalysts today. I mean, this week coming up. So ExxonMobil, they have their earnings this week. Now, on Tuesday, the estimated EPS is $1.94 a share with revenue of $85 billion. And that makes it one of the world's largest energy companies. That's roughly an 83% year-over-year climb in its revenue. That's big. Now, the oil and gas sector has been moving this year. The Vanguard Energy Etf, which is another ETF that you could go with if, say, you were worried that Exxon is a bit overstretched and almost to the overbought point. Well, you could hop into an energy ETF to catch a basket of different energy companies. Now, the ticker symbol for the Vanguard Energy ETF is VDE. VDE. Now, it's up 17.2% year to date. That's a pretty big move, especially when the S&P 500 is down 7% year to date. That means it's outperforming. You take 17.2 plus the -7 added to it. So it's doing really well. All right, so that is VDE as the ticker symbol for Vanguard Energy ETF. And you can see this move that it's made this year. It's steep. It's a really nice rally, and it's been in a rally since October. It has just been moving. Now, Exxon itself isn't doing too bad. It's up 23% year to date. So don't get me wrong. Exxon Mobil, again, it still has another 10% to go before hitting any real resistance. It's just the RSI at 76 gives me a pause right now. Plus, if you look at some external factors for ExxonMobil, Chevron, ticker symbol CVX, it reported its earnings on Friday with a fourth quarter profit that missed Wall Street estimates and offered a, let's call it a weaker outlook for this year's oil and gas production, sending its shares lower. Will ExxonMobil report similar news? Then you've got OPEC Plus. It didn't reach its targets for production in December. Maybe I'm just reading a little too much into these outside data points instead of just focusing on the company itself. What do you think? Let me know. Do you use outside data points to help you decide whether a stock is right for you to invest in or not? Let me know in the comments. I'm curious what you think. Now to a more clear-cut winner, and that's Alphabet, ticker symbol GOOG. Now, Alphabet, it reports earnings with an estimated EPS of $27.78 a share, with revenue of $72.2 billion. Boy, oh boy, does Alphabet know how to make a profit. So we'll be watching for a very particular gauge on the momentum of Alphabet's cloud platform, a component that has contributed greatly to the company's growth. Now, Alphabet is sitting at lows that were last seen during the summer of last year, and its RSI is at a 32. You add these three things together: earnings, the pullback, and the RSI, and I think Alphabet is setting up for a nice move for investors. I really do. This one gets a positive check for me for this week in our Catalyst Watch video. All right, next up, also reporting, is Advanced Micro Devices, AMD for short, and that's the ticker symbol. Now, they will report their latest quarterly earnings with an estimated EPS of 76 cents a share with revenue of $4.5 billion. AMD has taken a hard hit. It's down 26.8% year to date. Can their earnings turn things around? Well, remember back in October, AMD delivered a blockbuster quarter. It was awesome, along with a very strong forecast for the fourth quarter, this earnings coming up, suggesting the pandemic-driven boom for electronic products is far from over. I mean, just look at what Apple sold, right? So the question is, did that forecast hold true? I believe the answer is an overwhelmingly yes. The company's computing and graphics segments, which represents 39% growth when compared with the same period a year ago, if the semiconductor company is able to deliver this expansion, sales for the current fiscal year will grow by more than 50%. That will be a winning report. One more thing to consider here: the options market. It's predicting a 10% swing once the numbers are revealed. Now, the technical picture for AMD, its RSI is in oversold territory, sitting at a 20. Yes, 20. And it flashed a buy signal on Thursday when it hit a low just pennies under $100 a share. I hope you were able to scoop some up then. Again, you can play the Van Erik Semiconductor ETF, ticker symbol SMH. Why don't you go ahead and write that down? SMH for the Van Erik Semiconductor ETF, you can use that to take advantage of the many semiconductor companies reporting this week. AMD for one, and the one I mentioned at the beginning. Okay, I am very excited for this one. I have been arguing that this one has been oversold. I have been arguing that maybe the mark is being missed on this one, but it's with PayPal. Yes, PayPal. Oh boy, it can be a sore subject for some. But PYPL, PayPal. PayPal is another one that I'm watching this week. And if you look at this chart, you got to be thinking, why? Why, Adam? Why are you looking at PayPal? This decline has been harsh. I mean, look at this. If I go over here and look, let's look year to date. I didn't do this earlier. Oh, that's not too bad. It's down 13.2% year to date. But over the past year, it is down 30.2%. That's not looking so good. That means if you would have bought this a year ago, you would be, what's the phrase? Holding the bag? Yeah, not so good, right? All right, let's look at the technical structure here for PayPal. Let me get in here a little tighter. And you can see those purple squiggly lines there. I've been arguing for PayPal as a possible $200 being a low for this, but then it slipped and it rode this line right here with a low of around $180 a share. It rode that for a while now, since before December. I guess this goes back to November the 22nd is when it reached down into that area. So for PayPal to dip now to this next level lower, it doesn't look so good, right? Okay, $150 a share. I think that could potentially be a bottom. Now, the reason I say that it could be a bottom for PayPal is while we've been in this fall, PayPal has bounced around that area now for quite some time. So I see this as a long-term play. Now, remember the beginning of the video, I said that there was a tip that I wanted to share with you about PayPal, and specifically something that you can do to judge as a data source on how a company may be doing. And that is with, I'm going to pull up Google search. And I didn't plan this out beforehand. I probably should have. And if you type in here, website visits, or I think I just saw visitor tracking, website visitor tracking. Just type that in. There are a ton of companies out there that you can use. There are a ton of websites out there. Some good, some not so good. Like here's one, it says Business News Daily, website visitor tracking. So let's see what this looks like. And the whole reason why I'm doing this is to show you, okay, so it's telling you what it is. I didn't pull up the website for this, but TipRanks actually has a new feature. Oh my goodness. I can't believe I didn't have this website pulled up beforehand. I should have. Let's see here. TipRanks. Do they have it listed? I don't know. Let's go to a ticker. What ticker should we go to? I know a lot. Some people don't like TipRanks. Some do, but it's okay. But the point that I'm trying to get at here is you can use website data and you can get it relatively easy. Okay, maybe I shouldn't have done this during a live stream. I'll get this worked out and we'll do it. And we'll do it during our live stream tomorrow after the market closes. I'll make sure I've got everything pulled up in the proper place. But I thought it was right here. Yeah, right here. Hold on. Let's get it loading. I should have loaded. My apologies. I should have loaded this before the live stream. But this is something I really wanted to share with you. Now, TipRanks has this, and it's you go to a company's page. So I went to Tesla. Okay. And it says, I shouldn't have used Tesla. It says website traffic. It's one of your options that you have on the left side column. And what it shows you is the traffic going to tesla.com. Okay. And on a, let me just, I just keep apologizing here, but let me get PayPal up because that's who I really want to talk about. I really should have had this pulled up beforehand. I do apologize. Live streaming, right? I always mess up at one point during my live streams, but yeah. All right, so here it is. This is the website traffic for PayPal.com. Now, if you look here, this is going back, the very first data point here is going back to September 20th. And then we can move along. We get to a peak right here. This is December 20th. And we got January 21st, February. But then we get over here, okay? The bottom right here, September 21st. And then we go to October, November, December, okay? So what it's showing you here is the last three, well, it's showing you the past year. But in this blue box here, or greenish box to the right side of the screen, this is over the last quarter. So the past 3 months. Now, it shows here that visits to PayPal.com have been going up. When you have more visitors going to PayPal.com, okay, there's not much that you can do when you go to PayPal.com. All right. So, what this is telling me for PayPal is that there's more users going to their website. And it's actually over the past quarter, website traffic has increased 10.35% to 1.8 billion visits in the last quarter. So, can that transfer then to PayPal's earnings? Well, PayPal's earnings show a 10% improvement in their transaction fees. Maybe. Could it show an improvement in different fees that PayPal has? That's what I'm looking for in PayPal's report. I want to see what the correlation is to website visits, so website traffic, and a company's earnings. So this is something that I'm really diving into this quarter with a bunch of different companies, especially fintech companies, because you can track a lot of their movements, page views, app downloads. There's a bunch of metrics that you can use that are publicly facing that you have access to. Of course, some of them are going to be behind a paywall, but that's part of investing, finding your best options, the free options, and then weighing them versus the data you get that's behind a paywall. So I'm doing an experiment this month or this earnings season, to see if there's a correlation link there. Now, there should be, but how close and how tightly connected is that correlation? That's the big question. So, and again, it's not only PayPal.com. PayPal has subsidies as well. Venmo, for example, Venmo.com, it's up, what is it? 2.7% this quarter. And then you have Honey, which is another subsidiary of PayPal, and that grew, joinhoney.com, that grew 24.5% this quarter. So can that translate to an earnings win for a company like PayPal? That's what I'm watching for PayPal. I think that's going to be really, really important. Okay, another one is Electronic Arts. Ticker symbol is EA. Now, I'm not watching this one necessarily for earnings. It's been range bound now for over a year, and it's really caught here. It's just stagnation. Yeah, that's where this stock has been. And over the year, it's down 7.8%, but year to date, it's actually flat. It's up 0.02%. Now, the reason I'm listening and watching for EA when they report their earnings is because of the planned takeover by Microsoft of Activision Blizzard. If Activision Blizzard can be bought, why can't EA, Electronic Arts, why can't they be bought? Especially if their stock is going down, right? Or not appreciating, then it may look like a discount. Activision Blizzard stock had been hit hard. Microsoft saw that as a discount to go shopping. So, are there any bids out there for EA? Wouldn't that be a complete shock to the system for EA stock if there was a bid or two? I think that would really be a crazy move for this stock that's been flat for over a year. All right, now we're going to move on to Wednesday, February the 2nd. And this is where we have the OPEC Plus meeting. Now, analysts expect OPEC to have a strict plan, a very strict plan of 400,000 barrels produced per day in March. Okay. Now, like I said at the very beginning, in December, they missed their production targets or goals. So, are we going to have another potential miss coming up going through February into March on production targets? Because there was a slowdown and a complete miss in companies like Nigeria and Russia on production. How's the conflict with Russia and Ukraine going to affect production? And when oil is limited, which is the goal, to transition to sustainable, but we can't do it in the snap of a finger, or things are just go kablunk, right? But the price is going to go much higher for oil if we keep missing production. So I'll be interesting to see what they say. And it could help Exxon Mobil this week if oil prices do go up. All right, next up, the U.S. House, the Committee on Transportation is on tap to conduct a hearing, quote, the road ahead for automated vehicles. Yes, automated vehicles. We need to hash this stuff out in Congress. So it's good that they're talking about it. But this will be a potential mover of the needle for companies like, remember Aurora, ticker symbol AUR. There we go. Aurora Innovation. This is one that went on a roller coaster ride, right? This thing popped like crazy when it first hit the market. And then growth stocks completely fell off the table. This is one, it's been hit really, really hard. Look at this fall, right? But if the House can start positively talking about automation in the vehicle sector, right, that could be a good thing. Another company is True Simple, ticker symbol TSP, one to watch. And then, of course, Tesla. But I don't know. Will the government actually say Tesla? I know Joe Biden won't. Tesla seems to be banned from those conversations. So it'll be interesting to see what the House has to say about it and what they're meeting. And maybe nothing comes out of it, but it's good that they are talking about it. And then next up is Meta Platforms. Ticker symbol is FB because it used to go by the name of Facebook, but Facebook has been, it's not been doing good, quite honestly. Ever since, let me open up this chart a little bit further. Since this peak right here in September, the end of August, the beginning of September, it just hasn't been good. It had a decline and then it moved sideways for a couple months. And now it's at this bottom down here. It went under $300 a share last week. So with Meta Platforms, it has an EPS of $3.85 on revenue of $33.35 billion. Now, if this EPS comes in as accurate and they are in line with it, that would actually be a decline from last quarter. And that would be the first decline in what, maybe 2 years or something like that for Facebook. So they're losing some money, but Facebook does say they're investing a lot of money into Oculus, which is the virtual reality platform for Facebook. You know, the goggles that you wear to go to the metaverse, right? So, can this be a turnaround for Facebook? Can they justify the money they're spending? Are advertisers coming back to the platform and spending more? That's really what we need to be watching. And then, of course, any color that CEO Mark Zuckerberg can add to the conversation about the metaverse and their plans for virtual reality. And is the ticker finally going to be changed to Meta? Uh, is that Meta? Is that what it's going to be called? I don't know. They were supposed to change their ticker symbol, and they never did, and they pushed it off. So maybe we'll get that this quarter with Meta Platforms, Facebook. Also, another big bit of news for Facebook on this earnings report. This is the first time ever, but they are going to break out Facebook Reality Labs, okay? When they show their breakdown of revenues and costs and so forth. This is a new segment that they are going to put in their earnings report, and it's going to focus on the consumer hardware like the Oculus virtual reality headset. So that's going to be interesting to see how that's playing out. They're also breaking out another sector or segment on their earnings report, and it's the family of apps unit. And that'll show things like WhatsApp, Facebook Messenger, Instagram, and so forth. So it'll be interesting to see if those platforms are costing money or making money or how they are interacting with the company itself. So that'll be interesting to watch for Facebook. Okay, the next one is Qualcomm. Ticker symbol is Qcom. Now, this is a company that you should never bet against when it comes to earnings. And that's because they have beat every earnings since, well, I guess since is the wrong word. Over the last 2 years, they have never missed an earnings report, even maybe going further back than that. So, Qualcomm has an EPS of $3 a share on revenue of $10.44 billion. Now, Qualcomm, it should be looked at under a new microscope now, because it's not so heavily affected by Apple anymore. It's spreading its wings. It's getting new sources of revenue. So that'll be interesting to watch for Qualcomm. Now, when their earnings, again, if we look at this as a technical structure here on the chart, it had a big gap up last earnings. And it's been flat since then. It's been range bound, moving sideways. It had this beautiful bilateral pattern here, this descending triangle, beautiful breakout of it. And now, if you look at the RSI, it's down to a 35. So it's getting down there towards the bottom of it. That could be a good technical sign that, hey, maybe this moving sideways, range bound, maybe we can get back to the all-time high. With good numbers, of course, and more importantly than good numbers, good guidance. Look, if we measure where Qualcomm is right now, up to this red line up here, because that's where its all-time high is, that's a 19.4% move. So Qualcomm's got the potential for 19.4% off of good earnings and good guidance this week. And that would be really good for technology sector, because there's a lot of technology coming out this week with earnings. And the NASDAQ, it's one of the big laggers, right? Of course, small caps are getting beaten up even more, but the NASDAQ is still underperforming. We want to get that back into the positive, not the negative. So with all these technology companies reporting this week, there could be good news to help the NASDAQ out this week. So I don't think I'd be shorting the NASDAQ this week. I think it's going to be too volatile to do anything of that sort. Like I suggested in last week's Catalyst Watch video, which worked out perfectly. All right, moving on to Thursday, there's a company I want to bring to your attention, and that's Vista Outdoors. VSTO, Vista Outdoors. They have an EPS of $1.90 on revenue of $748 million. Now, Vista has rallied off of the past 4 earnings reports. Can it do it again? I think it can. Right now, the technical structure of the stock is beat up. The RSI is oversold. It's a 29, excuse me. The price is below support right now, just a little bit. It did pop 4% on Friday, which brought it right there to that line of support. And it's been range bound for 3 months now. It pops on earnings, and then it bleeds out, pops on earnings, and then bleeds out. It's bled out, and it's at the bottom now. I think it's setting up for a pop on earnings. So I just want to bring that one to your attention. Now, the last time its RSI was actually this low, oversold, under 30, was right before it went on a 140% rally. That's right. The last time it was this oversold, it went on a 140% rally right after. So it is in a buy zone right now, $37.92 a share. This is definitely one that I'll be getting in this week. And when we get to next week's Catalyst Watch video and we get to Friday's after hour show, during both of those live streams, I'll report back to you how Vista Outdoors did. I'm thinking it's going to do great. Okay, moving on to the big player on Thursday, and that's Amazon, AMZN. They report earnings, and this is the big behemoth, right? And nearly, I don't know. Let me just take a breath for a moment. Amazon's gotten beat up. It's gotten beat up really bad in the tech sector because of last earnings. It wasn't all good. There was some bad news last earnings. And I believe truly that this is either a make or break situation for Amazon this week when they report their earnings on Thursday. Make it or break it. What's going to happen? So one of the, first, the EPS for Amazon is $3.72 a share on revenue. Get this, $137.7 billion. They bring in the money, but they may not make a profit. Last quarter, Amazon warned investors, and I'm looking for it right here, the quote from Amazon. They said they may have sales up to $140 billion in the busy holiday quarter without making any profit, end quote. If they cannot turn a profit on $140 billion, this will be a bad quarter for Amazon, and their share price will go down, without a doubt. Now, Amazon has been having a very tough time with, quote, rising wage inflation, and of course, the big one that almost every company mentions, no matter how big or small, supply chain constraints. Yeah, they've been spending extra money on their fulfillment centers because of those two reasons. And those two reasons are why Amazon may bring in $140 billion and not make a profit off of that. And that's going to be bad news for the stock. So Amazon is a watch out and be careful story investing this week. It could present a huge buying opportunity, though. Because do you really think Amazon in 5 years, in 10 years, is going to be doing worse than it is today? No, not at all. So, while I do say this is a watch out and be careful earnings report this week for Amazon, it is the potential buying opportunity of the week. Amazon right now is triggering buy signals with technical analysis. But if those earnings do not come in as planned and Amazon's own warning is upheld, then that's where the problems set in. And the stock can go lower, and that's when it creates the buying opportunity. All right, so that's Amazon. Is it going to make it or break it when it reports earnings this week on Thursday? And then we have the last one for Thursday is Activision Blizzard. And just like EA, I'm not watching Activision Blizzard for their earnings specifically. I'm watching, and that's ATVI. Wrong screen there. ATVI. That's the ticker symbol for Activision Blizzard. Now, what I'm really looking for is any color that they can add on the whole Microsoft deal. That's what it is. When the CEO If the CEO talks, maybe not. But if the CEO talks, I'm going to be listening to this report, reading the transcript on any color they can add on the whole Microsoft deal with Activision Blizzard. That's going to be critical. Quite frankly, their earnings don't matter because Microsoft is stepping in. So any color, that would be great. And then Friday, oh boy, Friday we get the jobs report. Now, January employment report is expected to show an increase of 178,000 jobs and add a full 199,000 jobs for December. Maybe an updated revised report. Now, Bank of America is forecasting non-farm payrolls will be down 150,000. And the reason why is because, you guessed it, Omicron, but they see it as a short-term problem that mainly affects hourly workers, not, of course, office jobs, salaried employees either. So if employment does fall too far and comes up too short, that will bring down the market with it. So Friday, we're all watching it. And then, of course, the jobs report. One of the big things that the jobs report or it's for, I should have chose my words more carefully there. The Fed. The Fed will get this jobs report, and they will get the next jobs report as well. So they're going to get 2 more jobs reports before they make their rate hike decision, before their March meeting. And if those 2 jobs reports come in negative, then that's going to prompt the Fed to act and be more hawkish. And a hawkish Fed is a lousy market. That's what it's boiled down to right now. When the Fed becomes hawkish, the market becomes volatile. I guess because they don't know who's that hawk coming for, right? Okay. Well, that's it for this week's Catalyst Watch video. I hope you find the information in this video to be, number 1, actionable, number 2, informative, and number 3, helpful. And if those 3 things were met and you found action that you could take with anything that I mentioned in this Catalyst Watch video for this upcoming week, then click the like button. Take the URL and share it anywhere you can, and then click the first link in the description or the link in the live chat. Become a member and get instant access to our top 10 value, growth, dividend, and momentum stocks lists. They are so important because they help guide investors to help reach their goals, to help you reach your goal in 2022 in this wild and crazy market. That's what those lists are for, to be a guide, like a lighthouse in a choppy sea. So make sure to click the first link in the description. We do have a special going on right now. It ends January 31st at midnight. All tiers, no matter which tier, gets access to our most recent and updated value stocks, top 10 growth stocks, top 10 dividend stocks, and top 10 momentum stocks. You get the updated lists. 40 high quality stocks ready to choose from, again, that are updated constantly. All right. Thank you, ladies and gentlemen. I hope, again, this was an informative and actionable video for you, and I hope you can take something from this video this Catalyst Watcher video and use it in your investing this week and come out ahead. I wish you all the luck investing this week. I'll see you tomorrow after the market closes for the after hours show. Thank you, ladies and gentlemen, for joining me, and I'll see you in the next video.